have some esteemed business professionals, leaders in the real estate investment and ecosystem community here. And I feel a bit weird standing lower than you here, but probably that's how I feel in my understanding of real estate. So it's okay for the topic at hand. We didn't have a fifth chair on the same level with you, so that is okay. So before we begin, I would like to introduce my my esteemed panelists here. And you do have access to their bio in the brochure, in the digital one as well. But they bring a lot of experience to this conversation. And I'm going to introduce each one of them, and I'll take the opportunity to also ask them a personal question, because I just like that. All right, so I'm going to start with you, Peter. Peter Ilnicki serves as Chief Operating Officer and Chief Lending Officer at Self-Reliance Federal Credit Union. With 37 years of banking experience, Peter specializes in creating financing solutions through credit unions, offering lower interest rates and no prepayment penalties. Oh, I love that. So, ready?
Ready.
Okay, this is a fire drill. Okay, short and sweet. What's the most adventurous thing you've ever done?
You're talking legally, right?
Yes.
Probably snowmobiled through Yellowstone.
Oh, that sounds fun. Anyone else here did that?
That's how I broke my leg.
Oh, you want to do that? Yes.
We camped in Yellowstone, that's enough.
That's a community activity, right? Okay, great. Glad you survived it. All right, Nicole, welcome to our panel. Nicole Blajan is Chief Investment Officer and Managing Partner at Cogent Capital Group. Nicole has over 16 years of experience in real estate development, and she's focusing on self-storage and industrial assets. Her expertise lies in real estate diversification strategies. You ready? Ready. Okay. So this is a bit of a difficult one. So let's see. If you could have dinner with anyone, a historical figure, who would that be and why?
Okay, well, being born in Transylvania and participating with All-American panel here, I think it's only normal to say Dracula. But I would not go there. I will probably choose Leonardo da Vinci, just because such a genius, artistic genius, and innovator.
Can I join?
Yeah.
Can I join you in that?
Yeah, I'm sure we're going to be overwhelmed by the creativity, but I'll take it.
Very nice, thank you. All right, Matt Bowker, founding partner at Lodge Financial. Matt has originated thousands of commercial loans and has a deep understanding of the benefits of using financial brokers for complex real estate financing. So Matt, this is easy. I'm giving you an easy one. What's your favorite travel destination and why?
Okay, so I would say up until recently, my favorite place was in Italy. Just at the right time, I got to go there as a teenager and see like the Sistine Chapel and some of this ancient history kind of merged with modern society, and I just thought that place was fascinating until the spring, where my wife convinced me to go visit Prague, and that place blew my doors off. I just love it that they call New Prague New being 700 years old. It's like New Prague is 700 years old. And it just really had a big impact on me, and I can't wait to go back.
Thank you, excellent. I was starting to see a Leonardo da Vinci theme in there, but then you went to Prague. Okay.
I did.
All right, so AJ Menace here, Neighborhood Building Owners Alliance board member and also leader at Inhabit Realty Group. AJ has extensive experience in real estate, acquisitions and investments, and he advocates for policies that are benefiting building developers. Ready? Okay. This is interesting. if you could instantly learn any skill or talent, what would that be and why?
Actually, not a specific skill, but the ability to learn the skills. I don't know if you've ever seen the movie The Matrix, where he has that scene where he can like learn jujitsu or something. Here, maybe learn Romanian, just download it into your head immediately. I think that would be the most incredible skill to have.
Very cool. I would love that one. Wouldn't you? Do we have any jiu-jitsu players here? No? Anyone likes The Matrix? Okay. All right, this is the audience engagement, guys. It's a real estate investment panel. Okay, let's move into it. So, it's great to have you all with us here. Very excited. You all carry hundreds of years of experience, and we're grateful you're here to share it with us. Our community here, we estimate that somewhat in the large percentage, I would venture to say probably 50% of us are either passive or active investors in real estate. We have investment developers building multi-unit communities. We have property managers. We have so active investors, but also we have people that are just investing in real estate as part of their financial portfolio strategy. So, with that, we're gonna probably benefit in our conversation more the active investors, but certainly everybody can take some nuggets for from our conversation for your investment strategies. So with that disclaimer, I'm gonna start with my a series of questions here, and we're gonna go in rounds, and then we're likely gonna keep the last 20 minutes for audience questions. So please start thinking about them. Note them down, make a sign, and somebody's gonna come to you with a mic when we open it up for the audience. So, but until then, Peter, maybe I'll start with you, a question for you, maybe a series of questions here. So, how hard is it to get a mortgage today? And can you get us actually, that was for Matt. Sorry, I'm gonna start with Matt. Matt, I'll go to you. How hard is it to get a mortgage today? And can you get us some good rates if we show up our summit discount code? But seriously, where are the rates now? And where is the loan to value ratio right now?
Well, thank you. My rates are the best, so don't listen to anybody else. I think rates are really dependent on where we started, right? So when I started 28 years ago, the rates were much higher than they are today. Peter and I were talking in the hallways, like his parents' first mortgage was 13% and some change.
13.5%.
Yeah, 13.5%. So it's all relative. You got to keep that in play. But for right now, they're kind of holding steady. Although I don't know. Every day I wake up and I wonder which way it's going to go. But for the most part, things are still holding. There's some conservative tendencies happening in the market where loan to values might be changing, and some of the banks' philosophies about how they're lending is also changing, and we can talk about that later, but it's still relatively easy to get deals done. Then, historically speaking, the 90s was, giving money away. It still works. I think it's still getting stuff done.
Would you venture to say a number?
Oh, well, no. Well, I get everything that I do done, so it doesn't really matter. But no, the appetite's changing. There's kind of this imbalance between what sellers want to sell their properties for and what properties can support from a debt standpoint, and that's always been the case, and they kind of fight each other all the time. And so as a broker and as a banker, we have to come up with different ways to kind of bridge that gap and make things happen.
Very nice. I guess the message we take is you make it happen.
Yeah.
Very good. Peter, then I'm coming to you. You work for a credit union, so I don't know if we all know how credit unions are different than banks. What's the difference, and maybe why would a business owner or developer go to a credit union versus a bank? Can you help us understand a bit more?
Yes, the easiest way I could probably explain it is a credit union is like a bank except friendlier. I'm I'm sure all of you have been feed to death. Minimum balance fees, return check fees, all that stuff. We don't have one. We don't have one at all. So if you bounce a check, we don't charge you for it. If you have, we have access to 85,000 ATMs, and if you maintain a $1,500 balance throughout the month, we will refund up to $100 in ATM fees. Sounds fun?
Yes.
I'm sure all of you use ATMs quite extensively, and you get feed to death by your local bank. I did work at banks, so I've started my career at a small community bank. We went public. We got acquired by MB Financial. I worked at Chase for a while, and now I work at a credit union. And the easiest thing to tell you is that we sort of look out for you, not to make every dollar count. The way we look at it is, if we don't charge you in fees, we save you money. You'll use that money to purchase your dream home or condo or investment property, and hopefully you'll take the loan with us and not with Matt.
Competition out there.
I do business with all.
Okay, Nicole, then I'm gonna go to you next. Many investors, you run the gamut. They buy, they manage, they rehab, they build, construction, typically apartment buildings. They manage them. Could you tell the audience maybe a bit more about what other investments they could look at, and why should the members of our community be diversifying their investments through real estate? Can you give us more?
Yeah, sure. I'm definitely not a financial advisor, but honestly, everybody should have a little bit of stock and bonds and definitely money for a rainy day. When it comes to the real estate investment, I started in multifamily like many of my people that I know in the community, but I shifted in self-storage and definitely kind of opened my eye to a different asset class. And just want to point out that it doesn't matter if you're in multifamily, on the self-storage, industrial, or real estate, or retail. They all bring unique benefits, but also challenges, right? So I can only speak right now as I'm a purely self-storage and industrial developer, some of the benefits that diversifying in this asset class can bring versus multifamily, for example, right? So these type of properties have a high occupancy rate, they have stable cash flows, nobody really, I can raise the rents whenever I feel like it, right? So there's no, that's a big difference with the multifamily. There's no rent control, there's no eviction process, right? I can give them 20 or 30 days notice, and then either I sell the belongings and clean it up for the next customers. So, and I think a big one too is the construction cost of building a self-storage are lower than a multifamily. Now, full disclosure, there's risk associated with everything, right? Everything in real estate is a risk. So if an investor is looking to diversify, my advice to whatever the asset class is do your due diligence, right? Align yourself with a strong operator. I think that will save you a lot of headache, and it will protect your investment.
Great advice. Thank you. AJ, you're an investor in your own right with many years of experience, but you also are representing an organization that maybe our community doesn't know enough about it, and maybe we should, because we may benefit from it. So can you talk a little bit about MBOA?
Sure. Well, first of all, thank you for inviting me. I have many friends in the Romanian community, and nice to see some of you here today. So I'm a board member of a group called the Neighborhood Building Owners Alliance. And us in real estate, more than any other industry, the government can be either your friend or your enemy. And recently in many large cities, Chicago included, we've seen strong lurch to the left. And of course, a lot of that comes with problematic situations for real estate. I can't think of any other industry where the government will tell you the most that you can charge, right, which is rent control. So, it's very important, I think, for all of us in real estate to at least be aware of what's going on the government side. And, when we work together, we can achieve a lot of things. Most recently, I don't know if you guys were familiar with what happened in the city of Chicago. There was this ordinance voted on in March called Bring Chicago Home, which wanted to quadruple the transfer tax of property in order to put it towards homelessness. Now, we all agree homelessness, we need to work on that problem, we need to do whatever we can. However, quadrupling a tax on real estate is not going to help that problem.
Yes.
So what we do at the MBOA, and especially on the PAC side, the PAC is the Political Action Committee, is we're constantly monitoring some of the problematic policies, some of the problematic candidates that emerge, and we try to unify the real estate industry against it. With this recent election for Bring Chicago Home referendum, we won that, right? And what happened was, us as the neighborhood building owners, we're sort of the small landlords, right? But there are many of us. We worked with the National Association of Realtors. We worked with BOMA, the Building Owners and Managers Association, which controls most of the downtown buildings. And together, we worked together. We had a campaign with mailers, with events, with commercials to fight this increase in tax, and thankfully we won. But it never ends. I mean, every single year we are fighting against rent control. And it's funny because we all here should be very thankful to the Republicans who were in charge of Illinois in the 90s, because they did a statewide ban on rent control. Without that, the city of Chicago, the city of Evanston, Oak Park, they wouldn't be doing it. And every year they try to end this ban so that individual cities can decide on their own. Well, we know if that happens, Chicago will, the council will vote to have rent control. So that's one of the things that we do ongoing. Every year we have to fight that. And every year when they bring it up in the State House, we have to do campaigns to send letters to the politicians, tell them that, look, we're all very against this. And we do that all the time, and it's ongoing.
Thank you. A few more questions before we open it up for the audience questions. So, Matt, I'll come back to you. You kind of started to go in that direction, I have a feeling, but if I'm a developer that needs a loan, and I may consider going to a broker, a commercial broker, as opposed to a bank, I have a feeling you might recommend that we do that, just from your previous comment. But seriously, if you're thinking about why would someone actually go to a broker instead of going directly to a bank, are there some advantages or some situations when they might consider that?
Well, hopefully the answer is yes. Otherwise, my job might be in jeopardy. However, as a commercial mortgage broker, my job is to basically take the pulse of who's lending and who isn't, what their appetite is, what they can handle and what they can't. Going to a credit union might be great for certain things, but they may not be a specialist in the other areas. And so, since it's not my money, I get to hear the full story from the customer, find out what the strengths and weaknesses are, figure out what kind of leverage we need, and so forth. If you were, for example, to apply with a bank and all of a sudden, 60 days out after giving them, the name of the girl you dated in high school and all your bank statements and all this other fun stuff, and they turn you down, you're stuck and you have to reintroduce yourself to someone else and start that whole process over again. Whereas with someone like myself as a broker, I've already got your package, I already have the story, and my job is to pivot and make sure that thing gets done. Especially now, I've been getting kind of a lot more phone calls from people who have these existing banking relationships and saying, hey, these guys aren't really lending right now, what am I gonna do? And as rates come up for maturity and new rates are higher than where they were before, it's a valuable piece of information to have that I try to stay on top of and make sure we can get stuff done and figure out solutions. So yeah.
Peter, do you want to respond to that?
No, I kind of agree with Matt. He has probably access to the other every financial institution, I think, has their bread and butter. where like he may know somebody that does construction at a lower down payment than we would. We do it. I know right off the bat that our construction rates, we require a big down payment, which is not what you would want to put down. We do residential real estate right now for anybody looking to buy a house. We have 10% down, no PMI. If you all know what PMI is, it's primary mortgage insurance, and it could be quite expensive throughout the year. So our program right now, usually you have to put down 20% not to have PMI. 10% allows you not having to save that extra 10 and not pay that insurance that could be thousands of dollars a year. So that's one advantage that we have. Another advantage on the commercial side for investors is that we don't have a prepayment penalty. If anybody has a loan, let's say for $1 million, most commercial mortgages come with some type of prepayment penalty, whether it's 5, 4, 3, 2, 1, which could be a huge amount of interest that you're going to pay just to get out of that loan.
Okay, so it depends.
It depends.
So maybe Willie, before I leave this train of question, I'll go back to you maybe quickly. You can talk about the access and benefits and benefits of Freddie Mac.
Sure. So outside of like your traditional banks, credit unions, your Wintrust or your First Bank and Trust of whatever your neighborhood might be, when you get into investments specifically for multifamily, which I think is probably a bulk of us, when you start getting that experience and have had ownership for a few years in a couple of buildings or more, and you start to kind of look for larger assets or larger size properties, there's small balance loans that are out there for non-recourse debt, which wasn't really around as much as it should have been in the earlier years when the market crashed. But when you get higher, you can take advantage of these products which have much better rates, longer term fixed periods, and the non-recourse or non-personal guarantees. It's a very nice program to do and take advantage of, cash out, leverage, interest only for periods that don't typically get offered from some of our traditional base level lenders.
And get a mortgage.
Yeah.
All right, Nicole, since you were just about to take the mic again, I have a question for you. Maybe nothing works like learning from examples, right? So can you think of an example of a diversification success, or even if it's learning from a diversification strategy that a particular investor?
Yeah, definitely. I think one of the things that I love about my job is that I always find opportunities that others are missing, right? Creating that niche, special sauce, or whatever you want to call it, right? So I think I'm pretty good at that, and just a quick example of how I was able to create value for my investors was that we purchased a piece of land at the intersection of, actually here in Chicago, at the intersection of Lincoln and Devon. Now this property has been vacant for the last 15 years, right? It was an existing movie theater. And a lot of developer has passed on this opportunity for many years, just kind of couldn't run, has a small parking lot, very difficult build, and nobody could make sense out of it. So we purchased it at a good price. We're able to save on our construction timeline, construction cost, and we were able to mitigate our real estate tax bill, right? So I think the coolest part of the project was that we were part of the revitalizing the neighborhood, right? How cool is that to drive around and see, a repurposed building? I think that kind of brings me joy in what I do on a daily basis.
That's awesome. This is the good for good that I was talking about earlier. So how great of an example. Thank you. So before we open it up to the audience, so think about questions. I have one last one for AJ, kind of in the vein of the previous conversations. What would you say are community member business owners here, developers, how could they engage and collaborate with other communities through NBOA?
Yeah, I mean, look, when we have these elections, people, I think, underestimate how much one vote counts. Certainly in a presidential election, I would agree that, you know, if you don't vote, it probably won't make a difference, of course. But we look at some of these other elections, especially local ones. For example, I live in the 1st Ward in Chicago. There was a socialist candidate who was running for re-election versus others. He won with 400 votes. That's not very many people, right? Same thing, for example, with the Cook County prosecutor, the person to replace Kim Fox. She won by 1,100 votes across all of Cook County. And you know, when you can get your community involved and on the same page, you can really make a lot of difference. And that's how you can sort of gain political power. That's how you can influence the government. That's how you can influence the politicians. So, you know, that's what we try to do with MBOA, is bring together, obviously our focus is neighborhood building owners, the small landlords, guys like me or some of you who own 2 flat, 3 flat, 6, whatever, smaller buildings in the city. And we realize that there is an opportunity for us to work together, to put our voice together. And now, you know, we have events. There are many aldermen, there are many Cook County commissioners that come. We give them donations when they have events. We have our own events which they come to, and you know, it builds the political power that is important in order to protect your rights and your business.
Excellent, thank you. All right, so I did give you a bit of time, a heads up that this is open for questions now. So we have one here in the first row. Mihai? Who's running the mics? We lost our mic runner. Angie, thank you.
I'll be your mic runner.
Okay.
So I have 3. I'm going to urge you to be quick because I have literally a litany of questions headed at you.
You only get one now. And
I'm only going to get one now. Yes.
You're
So Peter, the first question is directed to you. Last year we talked about, well, how nice or like would it be interesting for the Romanian community to start a credit union or a bank? So the decision is, and we actually came to see you at the office. That's how we met. So
And you're going to make me president, right?
Yes, we're going to invite you to advise the credit union. Here's my question. So there's about 135,000 people here in Chicago, Romanians here in Chicago, about 1 million in the United States. There are today 17 Ukrainian credit unions in the United States. There's 0 Romanian credit unions in the United States. Can you compare the 2 populations? And then I know these numbers are public. Can you tell us about your number of members and your revenues? And would you actually start a credit union if you were in our place?
Yes. Right now, we have the war going on in Ukraine. So over the last 2 years, we've had a huge influx of members. So we went from probably approximately 25,000 members to over 40,000 members in the last 2 years. We were, I think originally when we started, were 1950s. We're about 73 years in existence. So it took a long time, and we finally reached 1 billion in assets. So it does take a long time, and it will take a while. It's not an easy process, and it's a slow go, but it really kind of depends on the Romanian community, just like it does the Ukrainian community. The more you guys come together, then yes, it makes sense to do it.
Anybody other than Mihai has a question?
I'm just the runner.
Yeah. Hi everyone. Thank you so much for bringing so much knowledge to us. My name is Kunzi. I am trying to figure out how do I get into investments, right? I'm early in my career. This is a new asset class, so very interesting to me. But I'm an immigrant. My immigration process is still in the works. If I go to a bank, how does a bank look at someone who doesn't have a green card ready to go? Like, what is the process you go through, and how do you convince a bank that yes, you're worth your loan? Not even commercial real estate. We can talk about commercial too, but not relevant. I assume this is relevant for a bunch of newcomers, right?
Yeah, I can answer from my side.
He owes me.
I do. Whatever he offers, I can beat. It's a real challenge. It's a problem because all of the loans that you're trying to start off with are based on the fundamental idea that they're going to take the property back from you. It's foreclosure-based lending is the thought process. And if you're not here, with a permanent resident card or having some other situation, they're probably not going to be able to lend you and get you started. You're going to need someone else to jump in with you as a co-guarantor until such time as the paperwork gets through and you can be on your own. That's usually what the suggestions that I make because it's not uncommon. And I know the length of time for that process is also a challenge. So if you've got anybody else that is a resident or a U.S. citizen that can be a partner in your venture, then you can get started. You can build that experience, and then when it does kick in, and you can take that person out, refinance, or move on your own and do the next project. I don't know if you have anything else, Peter. Do you do some different stuff?
We actually have that same problem right now with all the Ukrainian immigrants that came in. So right now, for the most part, they're either staying with families or their family is helping them with rent at some place. And I know some of these people that are coming in with substantial funds, so they do have money, but the problem is income. Since they just got here, they're starting their own business, or they may have gotten a job and they have 6 months of W-2 income. But the thing is they don't have 2 years of tax returns. And usually for a bank or the government, any Fannie Freddie entity, they need at least a minimum of a year, but mostly 2 years. So the way we came out with a program, and this sort of tries to help, but I don't know, in many cases, maybe it does a little bit. We've done some of these. So basically we increase our down payment for like your personal residence. So if you're here for like 6 months and I can prove your income through bank statements if you're self-employed, or if you're a W-2 employee, if I see constant payments, we just require a bigger down payment. It could be 35% down, but at least it gets you into your house. As far as investment goes, that's kind of trickier because most investments at minimum require 25% down anyway. And if you're looking to buy like a 5-unit or 6-unit, you're looking at a substantial down payment anyway, so I don't think you're walking away from it. So we sort of look at it a little bit differently. Plus, at that point, we're also looking at the cash flow from the building.
Okay, so thank you. I think we have a few more questions. I know there was one there. So, I don't know the order. I saw Theo.
We have a minute over there. 2 minutes, go ahead. Short, keep it short,
Okay.
please. Answer short.
So actually, perfect background. Nicole, the question is for you.
The white one.
Can you hear me? Okay. So thank you. Great background now that we talk about the loans. So maybe half of the people do own their homes or their investment, but the rest don't. As your background, as you said, you didn't start it with a commercial first. Instead of buying a home, which is not an investment, what would you advise the people that don't own a home yet to buy first? And with what kind of down payment? So it's both an investment and a home, or if that helps.
Nicole, do you want to take this?
Sure. I think obviously I specialize in self-storage and industrial, but I believe as a first-time investor, you should definitely go through own your own home, kind of understanding the obligation, the financial obligation, and how to manage that. I would only strongly advise people to invest in real estate, extra cash that they have laying down, right? So because we have to understand that everybody's talking about how great real estate is, but nobody talks about the failures too, right? A lot you can lose your money very quickly. So as there are a lot of success stories, I think first my advice, if I was me, I was focusing on buying my own home and understanding the process, and then perhaps being part of a small investor pool to allocate some extra money and invest in different asset classes.
Yeah, I think my name is Anna, by the way, you guys for being here. I think what Luminita was specifically asking if it would be wise for your first purchase to be an investment property, such as like a 2 or 3 flat versus a single family home.
I mean, one advantage that I will see to buy a 2 or 3 flat, right, as a first-time owner, that when you purchase that first-time mortgage, you can utilize the income from the other apartments, right? You can rent it and then counts to paying your own mortgage, right? So that will help you down the line when you want to become an investor, as you have that track record, right? That I was a homeowner, I was actually a landlord, right? And I believe Matt, and you correct me too, Peter, when you want to become an investor, you have to have a track record, right? The bank will ask you like, what's your experience? Have you managed other properties? I don't think you can just come up from the street and jump in and buy 10 units, right? But I mean, if you can, go to Matt.
Yeah, well, I'll add that I started with a 2-unit for my first property, for my single-family home, and with that also comes the risk that Nicole's been talking about, right? Because if that unit's empty, usually the 2 flats more than your first single-family home, you're gonna have to figure out how to make that payment on your own until that unit gets re-rented. If it's rented, it's nice. It keeps your payment, your obligations. So there's a risk-reward benefit as you go into different types of properties, and that's what we're kind of trying to drive home. But I started with a 2 flat because I was like the idea of having someone pay a portion of that mortgage and that debt.
Yeah.
But you have a tenant too, and a neighbor, and all that kind of fun stuff, which could be good or bad, depending on how you
And
do it.
also, nobody's talking about the increase in the real estate taxes and insurance, right? That really eats up from your bottom line. So as you're literally banking on the extra income from the, let's assume 2 units, as Matt said, like if you were responsible for those obligations, it's gonna be hard.
To sort of add to that, my outlook on it is everybody's in a different financial situation. So if you can buy a 3-unit or 4-unit, great, fantastic. If you can live in it, even better. The only problem is most people won't have that kind of down payment for that type of unit. So it really...
From my understanding, I think you can put down as low as 5%, correct? For
You can.
a unit, up
You
to
can.
4 units, if it's
You
a primary
can.
residence.
With that comes additional payments because you'll have mortgage insurance and some other things that will tap on top of that, which will potentially shrink the margin that you're thinking about.
Yeah.
I'm gonna hook on something. Did I interrupt you?
No, go ahead.
Okay. I'm gonna hook on something you just said in your answer. It's like most people don't have that kind of cash to make those bigger investments. So maybe I'll ask AJ, what if we were in the community? Some people may want to pool funds together to actually invest in bigger projects, maybe through a partnership or something. What should we all think about? Are there concerns? Should we know anything specifically?
Sure. Well, I think it depends on how you structure the partnership. There are different kinds. If you're just you and your friends and you want to buy a 2 flat or a 3 flat, there's not really any additional hurdles that you need to do. Of course, you're going to want to draft something called operating agreement, which just spells out what happens in different situations. If one person wants to sell but the other doesn't, you have to have that stuff in writing. There's a different level though if you want to do a bigger syndication, and these are the deals that I have many of you in the Romanian community invested with me as well. When you have a different level like that, where generally it's kind of more of a general partner and a limited partner arrangement, there are different legal requirements. If you are going to solicit funds from investors, there are documents you have to prepare. One of them is called a private placement memorandum. There are certain rules about who can and you cannot include in your investment. For example, they must be a accredited investor, and that's a specific definition. It means you must have either, I think it's $1 million net worth or whatever it is, $200,000, $300,000 a year of income. And if you don't take care of these things beforehand, and there are problems down the line, you as the sponsor of the partnership, as the person making the deal together, you are opening yourself up for some liability. So again, this is really only a concern if you're trying to do bigger deals, and I think that wouldn't be the right way if you're starting out. You probably do want to do what Matt said, get a 2 flat, what they call house hacking, right, where you buy a 2 flat, you live in one and you rent the other. You don't have to worry about it with something like that. But if you do want to get some friends together, again, you don't have to worry about it. If you're getting more advanced and you're getting to the level where you're finding outside investors, and you specifically have this different structure where there's a general partner, meaning that's the person who is signing on the loans, that's the person who's taking all the risk, then you have to have different sort of paperwork arranged for it.
Great, thank you. All right, I think we have 2-3 more questions to go through.
Sorry, just a quick note. I never got to ask my question. I was
Go
just
back to
asking
you.
for Lumini to
And I interrupted.
Sorry.
No worries, absolutely. So, for those of you that don't know, I'm actually a loan officer myself, and I work for a family-owned business, which is a very small brokerage. But what I really enjoy about it is the flexibility in the programs that we offer. So, I wanted to kind of ask you guys, what do you think the benefits of working at a brokerage working with a brokerage versus a bank? And I kind of want to go back to you a little bit and say that there are a lot of options for people specifically in your situations where we only look at bank statements or I-10s. So, yeah, big banks make it harder.
I mean, I can answer this question from my perspective. As I mentioned before, the type of deals that we're doing are, anywhere from $15 million to $30 million. So we always try to find the low cost of capital, right? Either it's on the debt side or on the equity side. So as I know Matt, and he was trying to do business before, I see a benefit of going through Matt because he probably has relationship and networking, which I think is key in our community, and we should do a little more than that. The efforts that we're currently doing, but Matt has a lot of connections, and I'm only good at what I can do, right? So I'm doing my due diligence when I go into a new market, and I identify who are the lenders, right, in that specific market, and I might go out there and take a couple of term sheets and understand what the banks can offer. But I see a huge benefit of going to Matt because one, it saves me time. He understands what my risk profile is, right? If I need recourse or non-recourse, that all these details are super important for me. And then he knows exactly who to target, right? And then he might have like a pension fund, or he can have different creative ways that can service the need for that. But no offense, Peter, I'll go with you too. I mean, whoever offers a better
And I
deal.
don't care who you dated.
Let's not go there, okay?
But you should,
That's what they say, but it's probably a question in their loan docs.
Let's go to Matt.
yeah, the same reason why
We're all
you're,
going to Matt.
why you're a residential mortgage broker. One of the reasons why you like that is because you have 100 other different programs and options and rules and guidelines that you can try to solve the puzzle, right?
Right,
So
and
you-
grants too that are.
It's exactly grants. There's all kinds of stuff that happens in resident. I'm residentially licensed, but I can't do it because there's so many programs and my brain just doesn't function that well. So for my commercial side, that's how I'm answering those questions. But that's one of the reasons why I love my job is because I get to work with people like Peter who'd solve this problem. Say, hey, I've got this. I don't have those W-2s. I don't have this. I don't have 2 years work history. But this is what I do have, and I like solving the puzzle, right, and trying to figure out how to get the solution done. And that's the same thing that you do as a mortgage broker. It's the same thing. It's like I want to solve this and figure out a way to get it closed and make people happy.
Okay, I have 2 jobs today.
Mhm.
One I like, which is talking to you guys. Another one is I have to look at the time too. So maybe I'll take one more because I saw the hand out there earlier, and then maybe we'll wrap it up. The mic is coming. I don't think we can hear you.
All right. Woo. A quick question about investing in residential versus commercial. For example, 2-3 flats for a residential versus 2 or 3 storefronts. Because when we invest in residential, we have to worry about people's life and death situation. With their storefront, we don't have to.
I'll ask you this question. What's easier to rent, residential or a storefront?
I'm asking professionals.
I mean, I'm just saying, I can find a person that'll rent an apartment faster than I can find a business owner that's gonna rent a storefront.
I agree with that.
There's also
And the real estate taxes on storefronts are very expensive. They don't go down. And in most cases, any store that has like a small storefront, they can't make enough money to cover the real estate taxes and pay their employees. So most of those little storefronts go out of business. So that is a very risky proposition. So I would probably say, don't do anything with a storefront.
And you know, there's a new rule about that as well. There was something called the apartment loophole, where commercial buildings that also had apartments were taxed at a lower percentage. The new assessor changed that. And I have friends who have a storefront with 4 or 5 units above, and their taxes jumped tremendously because they just changed the way that they treat the properties. Right.
Yeah, and then as part of my development, I'll give you an example, in Miami, I had to have retail on the bottom, right? And I found it really challenging to find accredited tenants that will sign a 10 or 15 years lease, right? Just because the businesses are going out of business, and it was really challenging, and I was forced to stay empty for 2 or 3 years.
I want to answer that just real quickly. There's some differences between 5 units or less from a financing standpoint versus the commercial side. You deal residential, which means you could potentially get 30-year fixed rates. Your rate doesn't change, it doesn't balloon, doesn't mature. It does go on your credit report, which has some pluses and minuses as well, versus when you're in 6 flats and up, usually the terms aren't self-liquidating 30-year fixed. They usually have a balloon or some event occurs after a certain period of time. 5 years, 7 years, 10 years. It'll either balloon or adjust. And so there are different rules on both sides of that in terms of investment strategies.
Also, if you're buying a 4 unit or less, you could do 10% down and no PMI right now. And in most cases, you can just do 10% and pay PMI if the program ends.
Do you do the 203K?
I do not. We don't do the 203K.
Ask her.
That maybe Matt.
203K?
Yeah.
You do them?
I got you.
She's got you. Like I said, too many rules, too many things for Resi. I know what it is, and I can explain it, but I think you should go talk to her.
Okay, so this is where I'm intervening and say you're not going anywhere from here with further deeper conversations outside. I think you're all offered to interact, provide your contact information, and be reached by our audience. We thank you in advance for that. What a great panel! What a great panel! I hope you all got some, like I said, nuggets out of this. It was tremendous. Was engaged. It was. This real estate investment is sexy. Yeah. Okay.
Peter's break assessment.
Okay. So let's just for the audience. Let's continue to take advantage of experts that are within our reach. If you have a question, just find someone in our community to ask, who should I talk about it? Let's continue to take advantage of these opportunities. Let's continue to support each other and grow up together, grow towards a brighter future. And certainly you're probably going to get more phone calls. So help me thank our panel, which has been tremendous. Thank you. We'll move on.